Saturday, February 28th, 08:52 a.m. New York time. Welcome back, investors, to Winning Wall Street's Money. Yesterday was the last trading day for the month of February. Looking at the stock sectors, the 11 stock sectors of the S&P 500. Monthly charts. Opportunity for good insight of investing in winners, leadership, the strength, not the weakness. If you're not familiar with what I'm saying, the charts will show price action. So technology, stock symbol, XLK. It's a stock ETF. You could invest in it. This is a 10-year chart, 10 years of history. Each candle is a month. See the yellow horizontal lines? I have labeled highs and lows of the years for key levels. Well, in the top center, we haven't even taken out the high of last year. What we have done this month, we made a new low for the year. We broke the low of January. So February, lower high, lower low. The trend is down. The momentum is down. This is the largest sector in the S&P 500. Makes up around 21% of the S&P 500, give or take. Again, those vary daily. That's not a healthy stock market, especially when technology is progressive. It's a leadership for many, many past years. Healthcare for the month, it's an inside candle. Yellow candles in my charts simply mean they didn't take out the high or low of the prior month. That means indecision. If they're hollow, like this one, that means it's equivalent to a green. If it's a solid body, it's equivalent to a red candle. Yeah, last month in January, we did take out the high from the past 2 years. That's good. It's performing better than technology, healthcare. But it's not the leadership. Financials. New low for the year. The trend is down. Lower low, lower high. You expect this one, and you want this one to be doing good in the economy. So the financial institutions have distribution, smart money selling them. They're performing poorly compared to good months. Financials, very broad. Financials include banks, insurances, financial management companies, merchant companies like the credit cards, financial institutions like the mutual funds. Big range. Again, financial is a sector. There's many industries inside of it. Not good. Again, the first three I just showed you, they represent the largest weighted average in the stock indexes. The S&P 500. Consumer discretionary. For the month, new low. For the year, and again, broke the low of last month. This one represents over 10% of the S&P 500. Yeah. Communication services made a new high for the year. That's good. We didn't close up there, but it's outperforming many other sectors. Wow. Industrial. Look at this. All-time new high for the year, new high for the month, higher high, higher low. Yeah, the trend is up, the momentum's up. Smart money has been doing accumulation, buying stocks in this sector. You could do that. You could buy the stock ETFs, which I'm showing you. That'd be more diversified. Or one could buy the individual stocks in the industry. These stock ETFs, on average, they represent about 10 companies in each sector. They don't buy all the stocks in the sector. They buy the big boys, the ones that are typically worth hundreds of billions of dollars. The bigger name companies, and not all of them performing well, which I just showed you on the technologies financials. Yeah. Communication staples. Look at this. Outstanding. We finally broke the high of 2024. Yep. It took well over a year to break the high of 2024. And now it's all-time high. Wow. Communication staples. Well, that's concerning again. Money is flowing into consumer staples, not into financials, not into technology. I'm referring to the stocks, not necessarily the individual company where they might be giving loans, credit lines, bonds. Energy, all-time new high. Utilities, we took out the high of last year. If you're not familiar with the energy sector, the energy industry in the United States, for the longest time, many past administrations, presidents, we produce one of the biggest industries of energy, fossil fuels, crude oil, natural gas, some other ones, coal. Like coal, we export a large amount of coal to China. Yep, the current administration, the past administration had tariffs and still do against China, but they still providing them a key commodity for their nation, coal. So the local communities that take the coal have jobs embedded in it in the United States. Let's say Virginia, West Virginia. Sure, if you stop that dead in its tracks, that local community, it would impact them a lot for jobs. So again, exporting coal, creating income for those communities in the United States, those businesses that are profiting off of it, and again, paying tariffs from that country. It's not the only country exported them. But that being said, again, why aren't we keeping those resources in more reserves in the United States? Why are we not using more of it? Well, we have an abundance of fossil fuels, again, crude oil, natural gas, coal. It costs a lot to build storage facilities. If you don't know, natural gas, for the longest time, many places burn it off. They don't store it. They don't have the capacity to store it, nor to transport it. Well, we also import on a regular basis crude oil from many other countries. Why are we importing crude oil from many other countries? Because there's different kind of crude oils, like sweet crude oil, such as what the United States produces mostly. Our industrial and automobiles don't use that kind. We use heavy crude oil, and we have to import. And we have refineries, many of them in the United States, that refine and also export oil. So that's the concern. That's the problem. We are dependent on foreign oil, even though we have a large production basis of it. Simply put, if you make automobiles, trucks, vehicles, farm equipment to operate, let's say, on natural gas, well, that would be a beautiful thing because it'd be less dependent on importing oils from other countries. Natural gas, we have a huge abundance of that. Like I said, we're exporting that. Just think if you make the trucks on the highways, the trains, the dump truck, the trash trucks, buses, big vehicles on natural gas. Or your power plants, more natural gas instead of diesel, crude oil. You have to be less dependent on the imports. It could be done. But again, most businesses don't want to invest in that. So you continue using dirty crude oil, dirty fossil fuel, and also dependent on foreign imports. Not healthy in many ways. Okay, now you know a lot more about the energy industry sector. Let's continue. Real estate. Look at that. We took out the high of last year. New high for the year. Way below the highs of 2021. It's not leadership. Nope. Materials. All-time new high. Outstanding. So that was the 11 sectors in the S&P 500. If you're not familiar with the S&P 500, it's the main U.S. stock index, the go-to stock index that financial institutions either directly invest in or they try to perform equal or better. Well, you have the opportunity to invest and outperform the S&P 500 with just simply investing in one or more of these leadership stock sectors. So when someone tells me they're invested in the NASDAQ 100, Dow Jones Industrial Average, or the S&P 500 monthly, yearly, and they're showing me great returns, some of them are not aware that they can invest in these underlying sectors. For whatever reason, the persons that sell them those stock indexes, they don't know, or they don't want to inform the customer. Well, again, what I just shared with you, you're better informed than many financial advisors and individual investors in the stock sectors. The stock indexes. Yep. There's better opportunities than investing in the stock indexes. You just saw them here. Thank you as always, spending a little time with me. That's it for the video. Thank you for watching.